The following is for entertainment purposes only. We are not financial advisors. We are not responsible for any losses, only the profits.
What's happening, Octo family? Yesterday we were talking about Uber and we got talking about where the money's at and where their money isn't. And it got me doing some research. Found a SPAC, an old SPAC that might be coming back from the dead. Waitr. Y'all in that one? Ever heard of it? Who they is? Founded in 2013, based in Lafayette, Louisiana. Waitr is a leader in on-demand food ordering and delivery. Waitr and its sister brand Bite Squad connects local restaurants and grocery stores to hungry diners in underdeserved U.S. markets. It's kind of interesting play. Together, they are a convenient way to discover, order, and receive great food from local restaurants, grocery stores, and national chains. So I like that they're not only doing the restaurants, but they're doing the grocery delivery. As of June 30th, 2020, Waitr and Bite Squad operating in small and medium-sized markets in the United States in over 700 cities. It's like a mini GrubHub, mini PostMates type of thing, right? Mini UberEats. So while we're talking about them, yesterday's video, when we were diving into Uber a little bit, I was mentioning, if you want more information on that, check out that video here. Here are some fantastic graphs that I was able to find. Rideshare monthly sales. This is for just rideshare. This is not for food delivery. But this is showing to go in conjunction with yesterday's video about Uber. And look what happened to rideshare. Index in US sales, it went from, let's just use this scale of 200 to 300 down to like 45, 69% drop for Uber. Absolutely terrible in March, and then it's slightly recovering up, but dude, way off. Where do I see this? I see this continuing to go up slightly, but we ain't gonna see this back up here for a long time, I don't think. Second quarter 2020 highlights. Revenue for the second quarter of 2020 was $60.5 million compared to $51.3 million in the second quarter of 2019. Which is an increase of 18%. Now this was second quarter. Third quarter's not out. Third quarter's on its way though. Net income for the second quarter 2020 was $10.7 million and 10 cents per diluted share compared to a net loss of $24.9 million or a loss of 32 cents per diluted share in the second quarter of 2019. A change of $35.6 million. Doing really well. The reason I like this is they're not diluted by this ridiculous rideshare business that isn't profitable. They're artificially lowering the rates just to compete. Adjusted EBITDA, the second quarter 2020 was $16.7 million compared to a loss of $14.9 million the second quarter of 2019, change of 31.6. As of July 2020, cash on hand was $87.3 million. These don't seem like massive numbers. This is not a massive company yet. August 3rd, the company prepaid $10.5 million in debt in exchange for a rate decrease of 200 basis points or 1 year, along with extension of maturity date 1 year, November 15, 2023 on both its credit facility and convertible notes. They're paying off debt. They're profitable. Things look good. Waitr is to host their third quarter 2020 earnings conference call on November 9th. What is that? Is that Monday? That's Monday. Should be really interesting. A leader in on-demand food announced today it's going to be releasing that. It intends to release its third quarter 2020 financial results following the close of the stock market. So that's why I'm getting this video out. So we have 1 day to possibly get in here if you want, because they won't announce it till the end of Monday. And the good news, it hasn't really run. I'm going to host the conference call at 5 Eastern. The conference call will be a webcast live from the company's investor relations website. If you want the link, it's right here. Go down the description of this video and just go down to today's video and you'll find it there. Call numbers, all that. So how do they stack up with the rest of the crowd? We've got to show where they're at compared to UberEats, PostMates, DoorDash, GrubHub. Basically, they're like 1% or less of the market. It seems terrible, right? Except for the fact that they're like the only profitable one out there right now. Shouldn't that hold some merit? Yeah, the other ones, DoorDash got 49% of market penetration. Huge. Uber Eats 22%. But Uber Eats, Uber alone, yet in yesterday's video, I pointed out, I think they're like at $500 million loss last quarter. Would you rather be in a company that's got a $500 million loss quarter after quarter, or one that's making $34 million a quarter? No, one of the industry's smaller services, Waitr, earned 1% of national sales in January. The company announced plans to lay off all drivers in favor of using contractors. They're referring to independent contractors or 1099 workers. The change comes weeks after Waitr installed a new CEO as it tries to boost share prices and remain listed on the NASDAQ. So NASDAQ, if my memory serves me correct, they want you to be around like $3 to $5-ish, but there's tons of other calculations that go into it, but they need you to maintain. They need that thing to go up a little bit. Waitr, this is where it gets funny. Waitr, part of the Tillman Fertitta, y'all heard of him? What SPAC is he involved in? Tillman? His portfolio to lay off all drivers, including 219 Beaumont. Where is that? Beaumont, I believe that's Louisiana, right? Beaumont? Or is that Texas? That's Texas. Right by Louisiana. Right on Houston. That's where it's at. Waitr, the food delivery service acquired by Tillman Fertitta's blank check company, Lancadia Holdings, for $308 million in 2018. Has anyone in the comments or watching this video been in since 2018 in this already? Put it down in the comments. Said it would lay off all of its full-time drivers, including 219 in the area, and it moves to a nationwide contract-only model for workers in April. Anyone live in Beaumont? Am I saying it right? Wrong? How do you like living there? It's a pretty cool place. It's right on the Gulf of Mexico there. So what does this mean to people who don't know what that means? This means they're making the right moves. They're getting rid of employees W-2. Employees cost businesses more money. How much? I'll say a national average of an extra 15% on the dollar. So if a company brings in $100, 15% of that goes to workers' compensation and other state random stuff and fees. If you hire independent contractors and make people get their own business licenses usually only cost $100 to $700 depending on what state and county and all that, then you don't have to get workers' comp. And then you don't have to get some other insurance things too. Your insurance goes down and you don't have to pay workers' comp. So profits skyrocket. It's at about 15% on the dollar. That's absolutely massive. This will help combat the new taxes that are coming to corporations too. Smart move. In fact, I think this is what most of the rideshare and food delivery places are doing now. Even Amazon, they hire tons of independent contractors now instead. Meal delivery, September 2020 share of sales. So this is showing DoorDash, GrubHub, UberEats, PostMates. We're not even on this one. So Waitr's not even on this graph here, but this shows you who's getting the market in different cities. You can tell that for some reason, whatever algorithm or AI they have all developed, they're picking certain markets to hit or not to hit. Just like Waitr is trying to get into the small markets where the other ones are like, no, we want New York, we want LA. They're like, let's get outside of LA, let's get Hemet, something like that. 2020 year over year change in sales by industry. This is something else to take a look at. This is fantastic for all stocks right now. You might want to come take a look at this, download this on your computer and save it. So August and then September, September coming forth, telemedicine is the number one skyrocketed right now. Then number two, which is surprising to me, is local delivery. I think that's really cool. I know a lot of grocery stores are now starting to do the local delivery and stuff too, so that's huge, Imagine if it's hard for your family or whatever, loved ones, to get to the grocery store sometimes and you can just order stuff now. I think it's the way of the future. I think a lot of even fast food, delivery. Why drive to McDonald's and get fries when someone can just bring it to you for $4? Finance and insurance went up. That makes sense. Home improvement, yeah, people are getting bored. Pets, People getting bored and lonely. Overall, sales of stuff has gone up. Stuff going down, auto parts is starting to go down a little bit, which is kind of interesting to me. Clothing stores going down a little bit. People don't get to go out as much. Gyms going down because they're closed. Childcare going down, closed. Hair cutting going down, closed. Amusement parks closed. Transportation, you see why. So this is why I like this play versus like the UberEats and the PostMates, because they're like they're killing the business, right? If they were only local delivery, they'd be doing well, but they're also in the worst category possible in transportation also. So no wonder Uber lost 500 million last quarter, right? Local delivery services 2020 year-over-year change in sales. March, what happened? People were like, oh yeah, let's get stuff delivered. Dude, we're up like 180%. It's kind of trickling down. It's jumped back up though. I could see this staying above this 100% mark for sure for at least 6 to 12 months. Absolutely. What does that mean? I think that like this company we're talking about is probably going to have some good quarters for at least 2 or 3 more. Meal delivery U.S. customer overlap. Showing how many customers also used a competitor in the third quarter of 2020. This is kind of interesting, but basically showing people that have used Waitr, they've also used all the other ones, GrubHub, DoorDash, UberEats, PostMates. But it's also showing like people that have used GrubHub, most of them have used other ones too, right? Like most people have used PostMates, have used Waitr. UberEats, you know, they've all tried Waitr also. So Waitr's just like the small duckling, right? Small town duckling. So again, this was a SPAC, which is cool. Look where it was though. You know, it launched, it got the ticker change, and it went above the $10, $10 floors. You know, a lot of SPACs have floors. It was above that, and then it just started just bleeding out. Where did it go? Oh my gosh, it went down to $1, and then it went down to like 50 cents, dude. Has anyone been in since 50 cents? It was at 50 cents at the beginning of the year. It's unbelievable. March happened. What happened? It mooned. It went all the way to $4.25 because people knew that people are using these businesses more. Since then, it stair-stepped up. What happened? So these pink lines I drew in, this first one was the second quarter results when they came out. So what happened? The first quarter came out and the results were pretty good. So it ran up, it went down a little bit, and people were preparing for the second quarter results knowing that it was going to be really good. So what happened at the second quarter results? They came out right here on August 3rd-ish. They were good results. What happened? People took profit. People are like, sweet, I'm out. But look what's happened since then. It's just bled out. But as we've seen in those other graphs, we know things should look pretty darn good. I don't see why this can't go at least half the run that it did last quarter, judging by those graphs, if we're just talking straight numbers here. So what's happened in the past couple of weeks, it's finally started to recover and is on its way up. I also want you to pay attention to these lines here. If you don't know how to graph or know what I'm talking about at all, I've got a charting video on how to graph. Go to my channel and check it out. So this first line I want to talk about, this red solid one that's coming down. This is the 20-day moving average. The yellow one here is the 50-day moving average. Why am I talking about that? Because in that video I explained when the stock is below those, that usually means it's a pretty good time to buy. And when it's above there, that means it's in a bull, it's heading north, right? When it's above it, it was definitely heading north. But look, we are just below it. It has been staying and tapping the top of them. What's going to happen? I think we're going to have some decent results. I think it could pop. Could it go down? Sure. There's been big caps that have great results and then it tanks and they didn't run up either. So we're just in a really weird time for the market. It's still kind of up in the air. I'll let you make that decision on what to do, but pay attention to all that. Here's some comments I found. Why is this stock being hit when they have had a positive quarter? The answer to that, people just took profits and the big boys aren't stepping in. They're waiting. Could be waiting for tomorrow. I think a lot of them actually were buying last week. That's why this actually went to like $2.50. And then the past week or two, it's actually gone up to $3.13. So people are coming in. Then this person said, Cerveza proof. Bye, 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 bye. I agree. I don't think the Cerveza sickness thing is going anywhere soon. I don't think the lockdown stuff is going to get any better for quite a while. Another person said, only profitable company in the business. Remember that dual sword of the other companies expanding too much? I don't know. This one could end up dying out and just fall off. It could be pulled off the NASDAQ. It's probably fine if it's sitting around the 3 or 4, it might end up being fine with all the calculations, but this is definitely a sketchier play, but it could be a earnings run up that y'all could try. What do you think? You going to get into this? Any other plays like this that weren't even mentioned there that could be coming up new? Maybe like smaller ones, even smaller than Waitr that could be acquired by another SPAC and brought to the SPAC market too? Let me know. If you haven't subscribed, please do it. It also helps out if you take this video and hand it out to your friends. That helps out. We also got a Patreon, and I slide you deals and little information that I keep hidden for days on end, but gives you good entries, and it's usually helping people out is what they're telling me. Y'all have a good rest of the day. Take care. Did you know that we give away free silver? Simply leave a comment on the video, and as long as you're in the continental United States, you can be automatically entered to win. Please friend us on Twitter and StockTwits.